What's up YouTube, it's Louis here, I hope you're all well. Today we'll be looking at Quant on the weekly time frame to start off. This might look a bit confusing to you, but I'll try and help you out. Of course, on the weekly time frame, I told you since this weekly close over here that it's a good time to actually sell some Quant and get into the likes of Ethereum, because Ethereum and Bitcoin did pump a little bit beyond that. So if we just go check that out, you can see we did pump at least a further 12% for Ethereum, for example. So well done if you did that. It doesn't matter anyway, as long as you took some profits, because since the bottom over here, we did pump at least 200%. So of course, pay yourself. That's why when we got that weekly close, I was telling you guys to go and do so. Now, the next weekly candle did close as a shooting star at resistance at the 55, which basically means, guys, that we should come back down and come back to this previous double bottom neckline. We spoke about this in the video yesterday, where we do anticipate that we should come to this double bottom neckline, as when we broke out, we never back tested it as support. We formed the bullish crossover here and actually back tested it as support. So that's a very bullish statement. What that should actually mean is that now we should actually continue and make that higher high. So we want to go and break $115. I told you this yesterday, and of course, if today you enjoy this video or find some value, let me know in the comments down below, and of course leave a like. We're trying to now hit 3.3k subs, so thank you guys for helping me reach 3.2k yesterday. We're now pushing for 3.3 with the goal of, by the end of August, getting as close to 4k as possible. Let's see how close we can get to 4k by the end of August. Thank you guys for all the continued support on the channel. And again, Quant, we really don't want this low to be lost. So we don't really want to be closing below $77. We've now formed this bullish cross and confirmed its support. We now need to go and break the high. So this is one of my favorite moves, the push and exhaustion phase. So we have found support, meaning that we want to break the high, but unfortunately we haven't yet. Let's see where we've retraced to the 786, and we can see that without even tapping the 20 EMA on the daily time frame, you're already getting some sort of reaction. So that's really good to see. Of course, when we do actually touch it, eventually you will get a nice bounce, basically. So it's all about seeing whether we do actually hold this as support, because if you can do so, we've got some sort of ascending support going here, and this could be some sort of double bottom forming right there with a higher low as the second bottom, and also some sort of ascending triangle. So that's what the bullish scenario for Quant is. Of course, if we come down back to this neckline, you can see some sort of double top over here, and of course, if you're closing below 88, there is the 55 under it. So the 55, you could come under the $88 neckline and validate this M pattern, bringing the target down to in and around, the target would be for the double bottom, you can see from the high to the neckline, the target would be in around 68, but I think that it'd make more sense to actually come back down and test the neckline. So that's why I put the line below this $83 or on this $83 green line, because this $83 green line is the actual range low of this this range between 83 and 150. Now that we're in that range, so let me try and make this a bit clearer and easier. So now that we're above the golden pocket here, and I'll draw that out like that, we should actually continue up, unless I've just explained the scenario, this M pattern happens and we could fall all the way back down to this double bottom, and we'd need to hold that as support to actually continue. And that's fine. You could come all the way back down to $60 and you'd still be fine. And I know you would be losing this bullish cross. I know that's negative, but technically just be coming back down to retest this. It doesn't have to happen, but I much prefer if we do come back down and retest it. It'd be very key, because eventually in the future, if we ever came back to this level, you could fall through it because it was never confirmed as support. So we want to actually come and confirm it as soon as possible. That's why I'd rather this M pattern actually play out. And yes, that's still completely fine. Even if you are bullish, you can actually still come back down to here. You can see it was a previous neckline of this descending triangle, and as well as this double bottom. So that would be nice to actually see that this M pattern plays out, and obviously the bears get very excited, come back to this neckline and just form another double bottom here and continue, and all the bears will be like, what? That M pattern didn't work, because potentially we're not in a downtrend anymore. The bears are right in saying we're at the 200 EMA, and that is resistance, and that is your trend determinator, so we should actually continue down, but I just don't believe that we're going to put in that higher that lower low. I don't think we're going to lose that low. They're going to put the higher low in around here. That's if we even lose this, but it would make sense to come to it because we got no retest. It doesn't have to happen. I would really like to, because eventually if we do keep going up, you're going to get a deep correction, and this will come into play at some point in the future anyway. But yeah, that's why we'd rather it happen now. But for the moment, you can see this was a range over here, and this was a range over here. So you broke out of this range over here, found support on it, retested the bullish cross, which is extremely bullish, and now all we're waiting for is to break this high, and we'll go to 150. 150 is written in stone at the moment. 150 for the moment is confirmed, actually, because we're above the golden pocket. We've created the reversal wave. The only thing that could stop us now is, now that we're running into the 786, this could push us below the golden pocket. If we go below this and retest it as resistance, then, and we stay below it, that means we're going to head lower, and that means for the moment we won't see this for a long while. This would be off the card. This would be off the cards for a long while. So there would be no point in being in long positions. If you know we're not going into that. As long as we're above this though, which we are at the moment, and we're holding it, and all we need to do is break this high now. If we can come up and break the high, then we're definitely going to 150. After meeting 150, then it's all about holding, of course, the range low 83, but I would actually personally say we want to stay above about $95. So once we hit 149, you want to stay above about $95 if you want to continue up to $205, basically. So that would be very nice, but you can see it'd be a very key resistance going forward. Yeah, and you can see that you probably expect a big crash. And on the really high time frames, like the weekly and monthly, we're going to see like a much larger potential, like ascending triangle like this, like that, or a massive double bottom. This is going to come later on this year or next year. We have to see. But I hope you guys enjoyed today's update. Let's get this to 200 likes. I do have a course if you're interested, as well as the mentorship. Just get back to me as soon as possible. I do have a few people interested, and it's a first come first served basis, so get them while you can. And yeah, I'll catch you in the next one. Peace.